that there was some expectation of a rate cut today. But I think if you look at it, and as most of the other panelists have also been mentioning, we would like to certainly see what and how the budget is going to look tomorrow. But I think if you go slightly longer into time, I think clearly what is driving markets over the last couple of months is this huge global liquidity, and we have a situation where the foreign investors have been very large buyers into Indian markets pretty much across the spectrum, and local, domestic, both from a mutual fund perspective and domestic institutions have by and large been net sellers. So I think what is really going to drive markets really is we do believe that this liquidity drive will continue as we go forward, and in that context, I think that will be the key factor that will drive markets up.
But Rajiv, I'm just going to come back to you on the question that I was asking. Given that now you have growth in the mixture with respect to the RBI's projection, do you think that we can, going forward, see more capital formation and infrastructure spending happening?
I think, to answer that question, I think interest rates is only one part of the problem. And Mr. Mallya mentioned that the investment confidence in this country is weak because of governance, because of corruption, because of environmental issues, things not going through in time, and so on and so forth. So I think in that context, RBI can do only so much as far as the investment confidence is concerned. I think the larger issue is something that the government needs to have the appropriate policies, rules, regulations, laws in place to be able to give the entrepreneur the confidence to be able to go out and increase capacities, increase investments. So in that context, interest rates is only one part. I think I just want to add, we've had some discussions in terms of liquidity, and I think one of the numbers that I just want to mention here is that over the last 3 to 4 months, the RBI has sold something in the vicinity of about $20 billion, about 100,000 crores worth. And I think as long as there is pressure on the current account deficit, and as long as the RBI is supporting the rupee, I think it's very, very difficult for the short-end liquidity in the marketplace to improve in any considerable manner. And I think the number of tools that are available in that context, CRR is only one of them. We've also had fairly aggressive OMOs from the RBI. So in that context, the number of tools available to manage the short-end liquidity are getting more and more limited with the RBI.
You do have the economic survey, which will be coming out in a short while from now. The backdrop that we're working with is a high interest rate regime, the policy paralysis at the center. In light of all of this, what are your growth and inflation projections going forward? And what is the future course of action from the RBI? Of course, you have discussed that earlier, but with respect to growth and inflation.
I think the growth numbers we anticipate for 2012-13 will continue to be relatively weak, somewhere in the vicinity between, let's say, 6.5 to 6.75. I think inflation, we do have a window between, let's say, April and June, as Taimur was mentioning, where inflation will be relatively low, and what happens thereafter will really be dependent on what happens to oil and what happens to the monsoons and therefore food prices in India. So in that context, we do believe that from a timing perspective, we'll get a rate hike probably in April, but more importantly, from a quantum perspective, I don't think the RBI will be able to deliver the 100-150 basis points that the market expects. I think the numbers would be closer to 50-75 basis points as we go forward. As far as the fisc itself is concerned, remember that yes, we have a fisc problem, but unlike in Europe, we also have growth. So just by the fact that nominal growth will be somewhere in the vicinity of about 15% for the current year, assuming that the 2011-12 fiscal deficit numbers will probably finish somewhere in the vicinity of about 6%, we will probably get a fiscal deficit number tomorrow of somewhere in the vicinity of about 5.1%. So not because of fiscal or fiscal policies, but purely arithmetic will ensure that the fiscal deficit comes down tomorrow.